What's up, guys? You guys hear me? Perfect. All right. Yep. She's bleeding. All right. I want to start with the futures. So, like I mentioned back back on Wednesday or Thursday, I I had mentioned that once we play this move right here on the futures, once we play this move, that would have completed our A wave on this first wave down, and that when we bounce, that the market was going to take its precious time. Its goal, my theory was its goal was to consolidate for a pretty freaking long time, and it's actually right here. So we played this move, we bank, it came up, which is a wave one, wave two, wave three got up here, and then we kind of. I wonder if I have my fibs saved. Let's see if I can pull up my count. I think I deleted it. Damn it. Let's go to a 5 minute. All right. So basically, what we had was 5 waves up. We pulled back, and then we consolidated a long time. And one of my theories was that the market was going to consolidate and take its precious time and traps and give everyone the feeling that we reversed. But what ended up happening was it was just a bull trap. And that's how these guys do it. It's just, or that's how the market does it. Is they'll give you the idea, or they'll give you the feeling that we're in a bull market, and they find the right time to catch everyone who are bullish. And sure enough, they caught everybody after the bell. So market reversed. It seemed bullish. The market closed. We had a long 3-day weekend, and then when the futures opened up yesterday or Sunday night, and then into this morning, what do you know? They took it back down. So that what happened over the weekend was a perfect example of a bull trap. Okay, so whoever got calls over the weekend, um, that's what they wanted you to do. So now what's happening is your contracts are, I mean, they're destroying the contracts not only with consolidation this past Friday, but also obviously that they're taking it right back down. So here's what I'm expecting in the futures. I think we'll bottom. Here's my target for the C wave down to complete this wave, this entire move. So this pullback, remember my pullbacks, the corrective moves, or the corrective waves. It's 3 waves. It's an A, B, C pattern. So here's my target right now, 312 or 3120 to 3200. Remember the SPY, it's 1/10 of the value of this future. So really your SPY price would be 312 to 320. So let me look over. I'm gonna bring it over the SPY here. So here you notice we did our count. Um, let's see. So we got 1, 2, 3, 4, 5. What ended up happening was they actually stopped at my 3182 or the 382 level, which is how they typically fake some people out. So let me just draw this. I wonder if we were talking about the futures, right? Okay, yes. So if you look here on this futures, I measured this entire move down, right? And typically what you do is you'll see a retracement to the 5 and the 618 level, okay, of the previous move. So the target would have been the 618 here and the 5. But what I ended up doing, like we did on last, I think it was last Thursday when we played puts, they decided to take it to the 382 level. Yeah, I already had it drawn out. So right here. So instead of going to the 5, right, to the 0.5 of the 618 extension, they faked some people out and they took it to the 382. They took it right back down. Now, had they gone to the 0.5 or the 618 extension, then maybe then all the bulls could have sold their contracts, their calls, and and made some money. But that's what they wanted you to do. They wanted you to get in. They wanted you to think it was a bullish market again, that would reverse, caught you, and not only they didn't take to the 5 or 618 extension of this entire move down, they decided to take it to the 382 and trap some bulls. So that's what I'm tracking in terms of the futures right here, this target box, and in terms of the SPY. Like I said, see 312 to, in this case, 326. So it's a pretty big box. What I'm looking for is I'm looking for a 1-2 setup. This C wave down, remember, it's an impulsive move. Your pullbacks are correctives. They're 3 waves. Impulsive moves when they go up, or if it goes down. So your waves 1, 2, or no 1, 3, and 5 are impulsive. They take the shape of a 5-wave structure. So what I'm waiting for is the SPY. I'm going to take this out. And actually, I think we might be able to do it now. So let's just see what we got. I'm looking for a 1-2 setup, just that way I know where they're going. It's difficult right now because I mean there's no clear reversal. Middle low, middle low. Okay, so all right, so right here we started to form a green candle or a green bar on the MACD. So I've got a low here, which is right here on the MACD, and then I got a newer low here, or I'm sorry, let's just right here, and then all of a sudden I've got a lower low here. However, you notice the negative momentum is slowing down. So that's the 5-minute chart. So it's starting to look like it's going to reverse. So if this move holds, meaning this buy up into the open, I think this is what'll happen. Okay, yeah, look at this green candle right here. So they're taking it back up. All right, so if they can take it into this zone, okay, this is your resistance. All right, this is major resistance. Me personally, I expect them to reject near the 618 to the 5 level, but like last Thursday, I'm keeping the 382 level on there. That's how they like to fake people out. So it won't surprise me if they bounce to the 382. Here's why. The market already started bleeding at the 382 level in the futures to trap bulls, right? Do you think they're going to let contracts get higher into the 618 to the 5 level? No, they're going to continue to let these contracts get destroyed. So my expectation this is my opinion, I think we go into the 382 and 5 zone, and then we go back down. So that would be my 1-2 setup. So that being said, I would basically take the high, the low, and let's just say we make it to the 5 extension. Okay, this is using the trend-based fib extension tool. So if this move takes shape, here's what I'm expecting. Here's where I start. There's my first wave. Here's my second wave. Here's my third wave. Here's my fourth wave. And then here's my fifth wave. Okay. And then if you'll notice, that fifth wave ends right into my target zone for the end of the C wave. Okay. Now, this market could do anything. Okay. The market may screw some bears and I might not get this C wave down all the way down here. We may go into some sort of triangle, right? Where it doesn't get near here. It goes into this triangle where it's doing this whipsaw effect, where it wants you to think it's going down, but it's not. And all of a sudden, we reverse when we bust through that triangle. So, I don't know if I'm going to play this move down. I think what I'll probably end up doing is just letting this move take shape. If I do take it, it might be spreads. But I'm not going to use this week's expiration. I'm going to end up using next week's expiration. 1 to 2 weeks out is what I like to use, because remember, we lost Monday's trading day, so we're on Tuesday right now, so we got a short week. So it's still up in the air. I may or may not make this move. If I do, I'm probably going to do spreads. A part of me wants to be patient, let the move ride out, or finish it, let this move do its thing, and I'll start looking at like Apple and Tesla and Snap, and trying to figure out where my position is to buy those things, because once we can bottom, then all the rest will start to go back up. So if you look, and I think you all saw Tesla on my chart. Now she's reversing, okay? So like I said in the chat, if she's gonna bounce and reverse in this primary, if the primary target is indeed the path, it needs to bounce in this area and stay above it. So now that we've reversed on Tesla, well, I take that back. Now that I see a little bounce on Tesla, I'm gonna figure out where she's going. Okay. Let's get rid of that. All right, here we go. Well, I guess I can dump this because she did not go up. She broke. All right, so you know what? I don't think. Let's get rid of that. Okay, yeah, I think this move down's finished on Tesla. That's just my opinion. I think this was A, I think this was B, and I think C. Where's my C? There it is. This is what I'm looking for. So Remember, this pink path, that's my secondary path. Okay? My primary target's this one. So let me extend that. Taking it down to this 2618. Okay. So for those of you that are watching Tesla, keep an eye on this level. This right here, 379 at 397. This is your resistance level, assuming we go back down. So if she continues to go down, she's going to bounce in this area and then go back down. Now, if let's see here. Okay. Get rid of this. Let's get rid of this, just assuming. Okay, here we go. If Tesla wants the secondary path, which is lower, it's gonna bounce in this zone between 379 and 397, and then go straight down. But here's how you confirm if we're still going down. It needs to break this area right here. Okay. It needs to break this low. So if it can break this local low here, then it wants the pink path, which is my secondary path. However, it needs to tell me otherwise. So let's just doing a little exercise here. I'm just going to use the 618. That may not make sense to you guys, but basically I'm trying to predict waves 1 and 2, and I don't like to predict waves 1 and 2. I like to wait for 1 and 2 to before I even consider anything. But basically this is what it should look like. We'll get a rejection, and then we'll get a bounce right here. So what'll end up happening, if we're done, if Tesla found a bottom, this is what it would look like right there. Okay, so that's Tesla. Again, in order to stay bearish, we have to reject here and break this zone. So break this low. Okay, if we break that low, then I got to bring my C down because we're going deeper. As far as it's my primary count, I'm thinking I think the wave's done. The entire 5-wave structure. So right now I'm kind of looking up. So I need a 1-2 setup in order to start charting out where it's going. But other than that, if it breaks, then we're going down. And then I have to switch my primary and secondary targets. So basically the primary path comes off and the secondary path takes place. So keep an eye on that for Tesla. It's got to break today's low, or this pre-market low. Has to, for it to continue to be bearish. QQQs, it's looking ugly. Here's the path that it's taking. So I've got the 1-2 set up. Notice how we rejected at the 5.5 extension on the QQQs. Now we're just going down in a third wave. We'll bounce here when we get to closer to 242 range. So it'll be this. Somewhere around here. Oh, shit. Shit. Did not want that to happen. we'll get a bounce here. Which remember, fourth waves, they take a long time. So I can see it grabbing this in the morning, and like on Friday on the S&P, it's going to take its time to complete that fourth wave. It's notorious for consolidating in a slow manner. And then finally, we should finish off right here. Okay, so that's QQQs. Overall in the markets, I think there's a higher probability that, and I don't like this, but there's a higher probability that once we finish this ABC move down, we may reverse and go make all-time highs. I don't think I'm going to get my deep, healthy pullback like I wanted. So that's just a heads up. So there's a good chance that we may look higher after this move's completed. But again, I need the market to tell me that. I need, once this move's done, this will be, we should be going up. Okay. Now, to all-time highs, probably not. This could be my if in the bigger degree. So if we go to the daily chart, look at this. This is what I'm tracking. Yeah, if the market's going to reverse, it's going to reverse here, which I don't want it to. I want this to be the A wave, and then we go back up, and then we make a deeper pullback. That's what I want. That's what the market needs. It needs a deep, healthy pullback. But I wouldn't be surprised if it does a shallow pullback and it goes to all-time highs. So just that's what I'm tracking. All right, 811. What we got? Did I do Peloton last night? I don't know if I did do Peloton last night. Okay, so with Peloton, this was the move I was tracking. 1, 2, 3, right? Well, problem is, last night I mentioned let's assume this is 3 and we're going down into 4. 4 can't break. It can't enter the zone 1 or the first wave zone, right? So because we failed and we even get near this 3, now I'm looking lower. Okay, so with an Elliott wave, you have it's a 1, 2, 3, 4 structure. So for those that missed it last night, I'm just gonna play it for you. Okay, it's 8:13, so I want to hop off here in about 5 minutes. So okay, so here's the Elliott wave theory. I'm working on this PowerPoint, so once it's complete, I'm gonna start chopping this up into small videos, small 3 to 4 minute videos, but come on, where you at? Okay. So the Elliott wave theory it's a 5-wave structure. Okay, so you've got to move up into one wave. Okay, wave 1. Then you got to pull it back into wave 2. Then you got a wave 3. Okay, then you got to pull back into wave 4, and then you go up into a wave 5. This is a complete 5-wave structure. Okay, once 5 waves are complete, we then pull back in a much bigger degree. Now, waves 1, 3, and 5 are called impulsive moves. They go up, okay? Or if it's bearish, I mean, they're going to go down, okay? So, and those are your impulsive moves. But waves 1, 3, and 5, regardless if it's going up or down, bullish if it's up, bearish if it's down, those are your impulsive moves, okay? Then you've got waves 2 and 4, which we call corrective moves. These are your pullbacks. The corrective moves take shape in an ABC manner, okay? So impulsive moves, it's got 5 waves up, pulls back in an ABC, 5 waves up, and then a pullback ABC, and then 5 waves up, okay? Number 1, the third wave is always the longest, always the largest, which is why I tell everybody the third waves is the waves that I really enjoy playing, okay? Because look, you've got a 1-2 setup. This wave 2 almost goes back to the start of the first wave, which means I now get to, take advantage of this entire move up in a third wave. This is the wave that I really want to play. So, and this is when I'm looking at securities or these tickers, I'm looking to enter in 2, somewhere near this level. So if it goes up, let's say if it bounces and it comes up here, I'm still buying because I'm risking a few bucks to gain 3-5 times. Okay, so I'm not gonna get greedy. If I know I'm in a third wave, I'm gonna buy it. I'm gonna ride it. So going back to the impulsive waves, imagine this entire 5-wave structure. This structure takes shape within this wave 1, this wave 3, and this wave 5. Okay? Your pullbacks, they're A, B, and C. So sometimes you'll see me, an ATM trader, you'll see our charts and you'll see an A, B, C, D, E, or an A, B, C pattern. Those are pullbacks. Okay, those are corrective moves. So that's what that means. So this is all I have in terms of an educational piece. Like I said, I just started it last night. I'll continue to add to it. But once the deck's done, I'm gonna then turn them into short 3 to 4 minute videos. All right, it's 8:17. All right, let's look at Apple because I'm actually going to play Apple. I'm waiting for it to bottom. So I was originally thinking that we bottomed already in Apple. Where's it at? I'm just gonna draw it out. So I was thinking this was the bottom right here. Actually, no, never mind. No, I haven't touched this in a while. It must have been on my other laptop. All right, so let's assume this move's finished, right? Let's assume this is the bottom. I was really waiting for a pullback into this zone and bounce. But remember, if it breaks it, it's finished. It's the wrong wave count. So now let's just throw in the 764. Okay, 764 is a very, very important level. So when I measure a move, okay, we typically bounce in the 618 and 5.5 extension level. That is very strong support. Okay, for any move, it's very strong support. Where I tend to get concerned is if the bounce ends up breaking the 764 level. So when we open here in the next 10 minutes, there's a good chance that we may just pop up and then maybe get a double top, and then we may come down and break this level. Why? Because we got QQQs. So I think I was right when I was charting this out, where this is really the third, and my fourth ended here. So then that puts me right here for a wave 5. And that'll complete my move. Just make sure I'm doing this right. It's been a while since I touched this. Okay. Yeah, so I've got a 1. I've got a 2 up here that's hiding. I don't know why the hell it keeps turning on and off. Where are you at? That's so weird. That's not. Oh, there it is. Got 2. Okay. So I've got a 1 here, and then a 2 up here, and then now we just went tanked. Remember, third waves are the best waves. I mean, you could have saw Apple drop, pop back up, got in near the 0.5 extension, rode puts all the way down. And I think most of us played puts on Apple last week. So a lot of us banked. We just thought it was reversing, just like the market up here. But nope. More bulls to be had, or there was more bulls to be trapped. So bulls got trapped. Now we go down. So just pay attention to at the open if you're on Apple. If we break this 764 level, which is 113.69, so call it 113.70, if we break that level and we make a newer low, then we're on our way down to 106 to 110 to complete 5 waves down, and then we reverse. And then that's when I'll be looking for my 1-2 setup. So if we bottom, I'm not buying, because remember, waves 1 and 2, wave 2 will come back closer to the entry of wave 1, or to the start of wave 1. So I'm looking for that 1-2 confirmation before I actually place my position or enter my position to ride that wave 3 up. All right. Okay, guys. 8:22. Please be safe out there. If you're gonna, I would not recommend playing puts on the SPY. I would not recommend it. Wave 5s. Okay, I didn't mention this to anybody yesterday or today, but now I'm mentioning it. Wave 5s can be tricky. They don't have to. Wave 5s is not. They don't have to come down here. You may see wave 5 come here and do some sort of triangle, looking like a descending triangle, and then pop right back out. Okay, it's very dangerous. That's why I always love playing wave 3s. Okay, I got my 1-2 set up. I ride the wave 3, and boom, I'm done. I'm out. And then I look to play the other side once the move's complete. Okay, so I would not recommend playing wave 5s. Like I said before, the SPY really, did a number on me, and I'm fighting back slowly. But yeah. So let's look at Tesla real quick before I shut down or get off the chat. All right, so, okay, let me get this out of the way. So, I mean, this doesn't, yeah, keep an eye on Tesla. It's not looking pretty. It's not looking pretty. It needs to break this low in order to for me to consider to continue looking lower, which is my pink path. So right now, for now, gold's the primary target for me until it tells me otherwise. And the way to do that is by breaking this low. Okay, so the pre-market low, that's your low. Pay attention to that. If you break it, we're going further down, which I will again. I'll continue to chart and I'll post it into the day trade channel. So, all right, guys, trade safe. Again, my recommendation more. What I'm doing, I am not playing puts. That's what I'm doing. I'm sitting back. I'm gonna start charting tickers that I want to get into once this market can finally bottom. If I place buy puts, and that's a big if. It may just be spreads. And that's a big maybe. All right. So, all right, guys, be safe out there. Market's gonna open in about 5 minutes, or actually 6 minutes. So, look for me out in the day trade channel. I'll continue posting charts out there. All right, man. We'll see you.